Markets took a hit as President Trump warns he's done waiting on Iran demanding a full surrender and weighing a possible US strike as well. His abrupt departure from the G7 summit in Canada only added to all this uncertainty. Trade talks now hanging in the balance and new risks emerging from the Middle East as well. Volatility returning to Wall Street, stocks falling sharply while oil and energy shares surged on fears of prolonged conflicts and inflation. For more, let's head to Florida now. We're joined by Brad Gastworth from Unearthing Opportunities. Obviously, we've been watching what's been happening in Iran and Israel over the past week. Markets at the beginning of the week were pretty resilient, but now they're starting to watch pretty closely with the concern of an escalation.
I mean, quite honestly, Aaron, I mean, the markets have been incredibly resilient. You have, a nuclear power house being bombed, and the market's only down just 1% or 2%. So, I mean, I'm quite surprised that the markets have been this resilient. I think that's telling us that the market still wants to go much higher and that there's money in here waiting for the markets to continue to go up. So I think it's a very bullish sign to see how resilient the markets have been. I think that escalation is very likely, but the markets have really ignored so many macro things and really, having it really not be affected by some major escalations in the Middle East.
I mean, what investors have gone through over the past 5 or so years can only be described as the equivalent as electroshock therapy, right? It's not surprising that we can be talking about nuclear and an attack on nuclear facilities in Iran by Israel and what that could lead to, and yet markets are just having a bit of a shrug, just another day these days.
Yeah, I mean, look at all these major macro events that the market's blown off. You have the initial Russia-Ukraine that the market pretty much ignored. You had the initial U.S.-China that, it's over, 7 years ago now. But the market's largely ignored some of the most, some of these major macro events. We've had the escalations with Israel and the Gaza Strip. You now have Israel bombing Iran. You've had, the trade tariffs that have been monster trade, tariffs have, increased across the globe. And we've seen this market just blow all of that off. And to me, you can't get more bullish on signs than that. You have to sort of look at what the market's ignoring and realize that there's a broader theme playing out, which we're still in the early days of AI. It's going to make every company more efficient, which is going to help better, give them better financials. It's a very bullish sign for the market. Now, I think it's smart for companies or for investors to be hedged with some good tangible defense mechanisms like gold and silver. I like precious metals. I think those are good, investment vehicles to be involved in. But this market still seems like it wants to go much higher.
Yeah, very much so. What do you think the market's biggest concern at the moment is? Is it war, trade tensions, or how President Trump slept last night?
I think the biggest thing right now is the U.S.-China tariff side. I think, to me, that's the biggest thing that could derail the market the most. And, when they initially had that conversation where they had that 60 or 90-day pause, that's when the market stabilized and starting to go back up. And, to me, that's the biggest thing that can derail it because China has the exposure to some of the most important components that go into semiconductors. So we can't grow and build AI systems without rare earth minerals. And China has that lead on rare earth. And if they hold it back, then the U.S. is pretty much screwed. And I think China's and the U.S. both have reasons to come to the table to negotiate. Now, will it be so peaceful and so easy? No, but I think they both get it done because I think Donald Trump absolutely watches this market and wants to see the market higher.
Yeah, do you think that rising oil prices could force the Fed to rethink interest rate cuts, though?
Another great point, Aaron. I think oil prices are certainly going to go higher as the escalation with Iran and Israel continues. I think it actually, the Fed is tricky. I would say that inflation is absolutely known here in the States. Every product is more expensive, from retail to autos to electricity. Everything is a lot more expensive and it's not getting lower. Now, we did see some prices go down slightly, like gasoline prices, but they haven't really made it that, the small price decrease hasn't really been having an impact to the consumer. Now, the US consumer has been fairly resilient in spend. The bigger question, and I've brought this up also on this program previously, is on the labor market. Are we going to see bigger layoffs because of what's happening with artificial intelligence and robotics and automations? I think we will in years to come, but I think right now, the market's not that great. I think inflation's high. I think the Fed's in a very tough place. But if this market ticks higher, Aaron, I don't see the Fed acting anytime quite soon.
All right, interesting. I want to talk to you before you go just about Amazon's CEO talking about the impact that AI will have on staff levels over time, primarily through attrition. What do you think?
Yeah, I love the way he specifically worded it, that it wasn't going to be causing, I can't remember exactly the way, I don't have my notes, looking at my notes right now, but he said that, you're going to have less jobs, but it's not going to be from layoffs. I think it was something to that degree.
Yeah,
well, to me, that essentially is laying off when you're going to be shortening jobs from a company. So, I mean, AI is going to have drastic effects, and especially for a company like Amazon, where there's so many things with automation and autonomous vehicles that can help with drone deliveries, which they're sampling, to just the smarter logistics. This is all going to help the company significantly. And I wouldn't be surprised to see a massive reduction in headcount at that conglomerate.
Yeah, very much so. Well, they've got a lot of staff, and staff costs a lot of money. We'll leave you there for now. Of course, Brad Gasworth, appreciate your time. Thank you.
Perfect. Thanks, Aaron.